if you treat January of this year like a peak in gold and you compare it to 2011, it looks very similar from the shape of the ramp up and the dead count bounce afterwards, and then the second bounce and then the continuing downwards. It's scarily similar. 1980 is a little bit different, but roughly similar. All three of them echo in alarming ways. Now, I'm not saying that proves, therefore, that this is an interim peak and we're going into a bear market, but I do think it's a mistake for gold bulls to just dismiss that and say it's impossible. They did that in 2011 at great risk. So the question is, what am I looking for? I would like to see a divergence in those charts. Like the other idea, and what had been my base case actually going into this, my base case has never been calling January a peak and saying we're going into a bear market. My base case has been a period of correction and consolidation. And then I think the next big move was actually higher because of the reasons that I'm sure Mario would agree with, the central bank, participation, the money debasement, all that stuff going on. I think everybody in the audience probably is on the same page there. Like all those fundamental reasons haven't gone away. So my view has been that it's likely to be sort of like, when gold hit 3,000 and consolidated for a while, or even more in 2020 when it hit 2,000 and consolidated for 3 years before the next big breakout higher. That's been what I've been expecting ever since that correction from the vertical peak over 5,500. But the longer it looks like 2011, the more I have to say it behooves us to be cautious about, saying, no, it's got to recover anytime soon. So that's what I would look for. I would look for a divergence in those charts. As long as gold continues, fluctuating downwards, the more that elevates the risk of a mid 70s style correction or a post 2011 style correction, which by the way is roughly around 50% down. And we're halfway there, right? So if we did get to a 50% drawdown, then at that point, I wouldn't even care about the charts. To me, that would be oversold. That would be a no-brainer. And by the way, so 50% down is high 2000s. It's sub $3,000 gold. If we were so lucky as buyers who are cashed up to see sub $3,000 gold, I would be deploying with both hands or all four paws, as the case may be for a wolf. I'd have a garage sale. I'd sell some blood. I mean, to me, that would be like gold at 700 in 2008. Just a no-brainer of a buying opportunity. Since I'm cash rich right now, I could say that, I would look forward to that for all our long-suffering gold bugs who are still massively long. I can't say that I wish for them to suffer that fate. I'm just saying I'm prepared either way. But actually, my base case is not that that's likely to happen. And so my answer is I'm looking for a divergence in those charts. I'm looking for some recovery here. I would like to see gold show strength between 4,000 and 5,000, even if that does that for a year or two. That would give me confidence that the next big move really will be higher. But if it keeps breaking down here as we go forward, it starts looking more like an interim peak like the last ones.
I guess there's two things. Like back in 1974, late 74, gold got up to around 200. And then, like Lobo said, it corrected down to like 103 in 1975. And then from 1975 to 1980, it went up eightfold. 2011, we corrected from 1,920 down to 1,045 in 2015. But like you said, it took 11 years or 12 years for us to definitively break back above 1,900 and 2,000. And what I'm trying to say here is that this top in January, now, yeah, we could go lower in terms of percentage. We could go, I'm not sure, 50%. But what I think maybe Lobo agrees with me. I don't know if he means that 2011 we're going to be like 2011 in terms of correction. But I don't think we're going to see another 10, 11 years of the market to wait for the market to go back above 5.5.
I'll just jump in and remind everybody that, bullion is not a speculation or even investment. I really see it as savings or an insurance fund, if you will. I have literally used bullion in that way in my life, like financial meltdown, that last resort of liquidity. I have used that. And I've also used it in the other sense, a positive sense of a once in a lifetime buying opportunity. So But don't get distracted by talk about, what the market might do and what interest rates might do and all this stuff. In terms of, my speculations as a stock speculator, that's a completely different thing, from my stacks. And, like Mario says, it goes on sale. There's a big drawdown. That's a good day to add to my stacks.
Wasn't too involved in, but have become more involved this year is tungsten. Tungsten is a really interesting metal. It's got basically the same density as gold, but it's controlled by China, Russia, and North Korea. They control 90% of the market. And now with all the countries like the U.S. and China coming up with critical minerals list and the globalization breaking up. Tungsten is something that I think is going to be tough for the price to correct that much because it's not a market heavily traded by the bankers. There's no futures market. So it's a real physical market. And there are some interesting companies that I've been involved in the tungsten market and very few producers that are actually producing in the West. So I think that's a real opportunity, tungsten. And as for gold, like Lobo said, gold is insurance. And also, if you look at gold and silver since 1971, they've averaged about 10 to 11% average return per annum since Nixon closed the gold window. So that's what I would tell people. It's a long-term insurance versus currency debasement and central banks.
Well, Mario and Lobo, it's been a pleasure speaking to you both, getting your diverse perspectives on the metals markets and also these other commodities and what's going on in this crazy world. If our viewers are interested in learning more, Lobo, it is independentspeculator.com and Mario Innecco 64 on YouTube. I guess first, Lobo, do you want to share a bit about the services you provide there?
It's just a simple pitch. We have a free weekly digest that covers the macro, and I guess that says what I think about the value of macro. But for what it's worth, if you like this conversation, there's more available for free. You may or may not agree with me, but I can't promise that we won't spam you. You get one email notification per week, and that's it. And then, see what you think from there.
Mario, and you are the founder of the Home of Alternative Economics. What will people find there?
Well, I post content, every day. And the reason I do that is because when I started 11 years ago, that's what I'm bullish longer term, mainly because the debt situation hasn't changed. And the only way they can keep the system going is through more inflation. And by inflation, I mean increasing the money and credit in the system. But I don't really provide a service, a trading service like Lobo. So what I've done for myself, and I tell my viewers that I do, is that I hold, let's say, $100 in the precious metal space, but 90 of those is physical and 10 is the mining sector, because I know the mining sector is very volatile. So I took profit maybe on one or two stocks last year because they did really well even before the run up. But I'm still holding my mining stocks. I didn't take profit like Lobo, and I'm adding on to it because I think they're still heavily undervalued, not just versus the general stock market, but even versus bullion. And in terms of the price action that we've seen, I go back to like November, December 2024. That's when gold broke through 2,700. And the reason I have 2,700 is because if you take the high from 1980 and the high from 2011, there's a trend line there in the logarithmic chart that came right at that level. And we broke that. After the election, it came back down and then it just flew. And the same thing happened to silver about a year later, like up until November last year, silver was still below 50. So I think that explosion through those two levels, in silver, it was from 1980 to 2011, it was a huge resistance. So I think we're in a new paradigm, and it's almost like a ship, a rocket going into space from the Earth's atmosphere, and it's getting really turbulent up there. So I think we're going to see huge moves going forward. Maybe in 2-3 years' time, we could be talking. We're going to have an even bigger correction, but it will be at a much higher level. And people who can't handle that, they shouldn't be in the precious metals. That's the way I see it. I think so. I think he spoke about reining in the balance sheet. That was like an interview he did a year or so ago. I don't know when it was. And I also heard Besant yesterday, the Secretary of the Treasury, saying, "Oh, Warsh has done a great job," even though he's just joined the Fed, and the Fed's still doing QE. He didn't raise rates in his first meeting, and the argument for higher yields hurting gold in the precious metal sector, I think that probably was true back during